have Mathew Job with us, who's the CEO and Executive Director at Crompton Greaves, to talk to us about the summer demand going forward. It's going to be a hot summer. It already is a hot summer, if at all I can say that. But so, Mr. Job, tell us, IMDC is the max temperature above normal in most parts during the March to May quarter. How are you seeing the demand for fans, coolers, and what's your expectation from the summer this time?
Yeah, I think if I look at the last few quarters, first to start with, I think the demand has been soft on the backdrop of the fact that the prices, the costs and hence prices have significantly run up in the last year and a half. Now, having said that, you're right. I think the summer is expected to be harsh. We have also seen the impact of that in February, where we know that February, has been the hottest February on record. So we hope that for definitely for fans. And for pumps and air coolers, I think the coming season, with April, May, June, which is a peak period for these products, I hope that the demand will come back strongly. I think one of the things that is leading me to believe so is the fact that for fans, for example, the last few months there was an additional disruption because of the fact that the fan star rating was going to be implemented in fans from the 1st of January. So there was a lot of phase in, phase out of products that needed to happen. I think by April that would have completed, and then and with the help of the strong summer, I believe that demand will come back in that quarter for all these products.
Okay, Mr. Job, this is Winnie joining in as well. So, I want to talk about that higher channel inventory, which is there for the fans, given that there's a change in that rating, like you mentioned. So, will it be finally absolutely normalized by April? And is there any sort of an inventory loss that we could be expecting to see then during this quarter?
No, I think, even, as a company, our objective that was, to always to get these new superior star rated fans to the consumers' hands as quickly as possible. So even in the October-December quarter, we had made a very clear judgmental call that we would not pump excess stocks into the channel. So neither did we build too much stocks in October, December, nor did we push too much into the trade. So even in February, I would say at least for Crompton, we have already started to see the star-rated fans in retail shelves. I believe that for competitors, who had pumped more stocks in the last quarter, it would take a little bit longer, maybe another month before things start to normalize. But I would really think that in the April-June quarter, most of the non-star rated fans would have moved out of the trade. That is my call. That's my judgment at this moment. Yeah.
Right. And given the higher inventory for fans, have you rolled back the price hikes you've taken before?
I would the cost increase for a 1-star rated fan versus a non-star rated fan which was sold till December, the cost increase is anywhere between 12 to 15%. However, we have only passed 5% to the market, which means almost 2/3 of the increase we have absorbed. And we did that because we believe that the consumer has already faced a 22% price increase in fans over the last 12 to 18 months, and it would not be possible to pass another 15% to the market. So in spite of the fact that there was a steep increase in terms of cost, we have only passed 5% to the market. And going forward, the goal that we are working with, or our R&D teams are working with, is to try and minimize this cost increase from 15% that we see today to as close to zero as possible. It may not happen in 1 month, but we believe that that is the way forward. If we have to really keep the demand chugging along well, the only option is to get that cost increase down to as close to zero as possible. And that's why we were happy only passing a 5% increase at the moment, although the cost increase was, as I mentioned, much higher.
Okay, sir, and just want to talk about your new products that accounts for around 50% of your revenue as of now. So how many new launches are actually slated in the coming years and coming couple of quarters as well, and will they be actually more focused on the energy efficiency side and energy efficiency products?
Yeah, I would say, if I look at our entire portfolio, the Crompton, not only fans, the entire Crompton portfolio, 50% of our sales comes from products launched in the last 3 years. Okay, that I wanted to clarify that what the 50% actually means. Definitely energy efficiency is one key theme which we think is going to play out in most of the electrical product categories. So be it in pumps, be it on water heaters, be it on fans, energy efficiency is going to be continuously important. However, I think the challenge would be to offer energy efficient products at a price delta that the consumer is willing to pay. And just to give you the example of fans, even earlier, one could buy a star-rated fan, an energy-efficient fan, 5-star rated fan, but it would cost almost double. So if a normal induction motor fan, entry level, was about 1,200-1,300 rupees, the 5-star fan was only at 2,800 to 3,000 rupees. So in spite of the fact that even at that level, there is energy saving and there is a payback period possible, maybe 3 years or so, a lot of consumers, only less than 10% of consumers were actually switching to those fans.
Right, and in your initial few years, you focused more on the lighting segment that's witnessed strong growth. Success mainly has been driven in this segment by bulbs, but now the market itself is shifting towards panels, battens, etc. So you're currently behind your competition, if I can call it, on this front. What's your strategy going forward on that?
Yeah, I think in B2C lighting, we are going to focus within lighting. We have both B2C and B2B. So going forward, we are going to focus predominantly on B2C lighting. And you're right. I think our earlier focus is only on bulbs. We have started to also build a much more competitive range for panels and battens. I think the key in lighting, just like in any other segment, is to find some relevant innovation. I think that's an area where we have not done enough, at least on lighting. So in lighting, I would say two things: make some significant innovation in battens and panels, and second is, I think, to spend enough behind marketing. I think on both in lighting and in pumps, those are two segments where we have underinvested in marketing, because as I mentioned, it is not enough to have a great idea. It is not enough to have a great technology that delivers a great idea, but it's also important to be able to communicate that adequately to the consumer. So I think we have to do all three in lighting. Get that idea, make the products, and then communicate. I think we have not done enough on any area of these three, and all three elements are being addressed right at this moment going forward.
Okay, thank you so much, sir, for joining in with us this afternoon on Markets at Noon. Yes, the management is saying that a bit of a subdued demand, but we could see recovery coming in. That was Crompton Greaves Consumer Electricals. On that note, let's slip into a very short break. Don't go anywhere. We'll be back with more updates.